Initially, I wanted to talk about the auditor's ineligible deductions fund, not just the deductions. I know we've been over and over and over the pink forms. We're tired of the pink forms. We're almost done with them and we don't want to hear about it. But the fund we really haven't talked about for a while. I think it's been, Dan Baston talked about it last in 2010. And this is a fund that was created in 2009, but really hasn't had a lot of money, and up until this point a lot of people haven't really been trying to use the fund very much. But it is on the new chart of accounts. It's fund number 1216. This is pretty brief. I'm just going to go over basically the nature of the fund, the allowable uses, and some limitations on using the fund, because I think that's the part that has been a little unclear, is that there are some limitations on using this fund. The law tells us that this fund is a non-reverting fund. They even put it in the title, Auditor's Ineligible Deductions Non-Reverting Fund. The money in the fund is to be treated as miscellaneous revenue according to the statute. Miscellaneous revenue has a specific treatment in the budget process. You estimate those revenues, you can budget them. But keep in mind, the financial statements are your financial statements. They're your representation, and if you want more specific information or classifications within the financial statements, or the receipts into this fund are so large that you almost have to give it a more specific classification, or else you end up with a financial statement that just says millions of dollars in miscellaneous revenue, which is never really a good idea. If that's the case, you may give it a financial statement classification as a recorder's fee or something more specific, or a charge for services, which is what this, what it is that funds this ineligible deductions, or I'm sorry, it's the civil penalty and collections that you make. So it may be an auditor's fee, charges for services that are going to fund this fund, and so you might want to give it that classification. Keep in mind throughout this, there's been much confusion, but this fund does require appropriation by the county council. So even though you finally have a fund where you have some discretion on how you use the monies, it has limitations and it does require county council appropriation. It has specific allowable uses in the statute, which is to say that it can be used for fees and other costs incurred by the county auditor to discover property eligible for a standard deduction. I find this kind of odd. I thought that it would state that it's for discovering ineligible properties, but it does not say that. And so I guess you can promote people legitimately getting a homestead or standard deduction. You can use it for the cost of preparing, sending, and processing the pink forms. Hopefully that's almost come to an end. And any other expenses of the office of the county auditor. I'm sorry? Yes. I can elaborate on that last one, which is the other expenses of the office of the county auditor. Anything that would be normally allowed to be in your budget from public funds would be acceptable. So it has to have a business purpose in the auditor's office. You shouldn't be buying assets for another office. You shouldn't be transferring these funds to another fund to be used by another office. But other than that, you only have the limitations in statute. And we're going to go on to those on the next slide. And if we don't get to the point that you're trying to get me to make, let me know. The limitations that are put in statute and this is where we're having some confusion and some discussions and some really unusual things going on in this state, is that it says deposits in the reverting fund, the balance of the non-reverting fund, and expenditures from the reverting fund may not be considered in establishing the budget of the Office of the County Auditor or in setting property tax levies that will be used in any part to fund the Office of the County Auditor. I did not mistype that. The law really says reverting fund deposits and reverting fund expenditures. I don't know what the reverting fund is. I don't know what the auditor's reverting fund is unless that is your normal budget. I don't think that's what they intended, but as soon as I say that for certain is a mistake in the law, somebody will educate me that it was not a mistake in the law. So what I am going to say is our audit position on this fund, and I think this is what's going to help you to understand the limitations you have. Our audit position is that this fund cannot be considered in establishing the budget of the county auditor's office, and by that I mean the normal general fund budget of the county auditor's office. And also, this fund cannot be considered in setting property tax levies higher, lower, or the same to fund the auditor's office. So in any way, shape, or form, this should not be used to consider what your total county budget's going to be, because the auditor's office is now going to be funded from a different place. So it shouldn't affect your levy, and it should not affect what the appropriations are given to the county auditor's office. You should not be adjusting your office budget because of this fund. Consider this fund a supplement. If you have money in the fund, you can do additional services, you can clean up records, you can do some of the things you've always dreamed of but never had money to do. But it has to be county business. Like I said on the other slide. Okay? So you do have a way to make some decisions about these monies, but you have to get council approval, and it shouldn't be that the county council is just wiping out your budget because now you're going to go after all these ineligible deductions, and so you can fund your budget there. That should not be the purpose of this fund. And it even says that in the statute. Please do make sure that you use the right process to spend this fund, and that does include getting specific appropriations by at least major budget classifications, doing the itemized claims like you do for every other fund to support accountability, and retain the supporting documentation for those claims. You have to be responsible, and you will be criticized right away in the media if you waste this money. So please just make sure that you're doing your normal job as you always do. This is not an incentive fund to do your normal work. It is to supplement the work that you are doing in some way. And so our hope is that we do not have counties that are out there hoping and praying that taxpayers fail to inform you about an ineligibility for a deduction so that you can fund your budget. That is not the purpose of this. It should still be the case that the county auditor's office is educating people on how to do these deductions correctly, and that should still be our hope. So that was just a little bit about that fund, because I think we have some confusion about whether it takes appropriation or not, and who has jurisdiction over the funds and where it can be used. And so that is the extent of pretty much of what I can tell you. If you have specific questions or concerns about using the money in a certain way, you want to talk about those things, we'd be happy to try to give you a specific audit position related to that, or help you to know what documentation to retain for audit to show that you are in compliance with that law. Did we get it answered? Close? No, not even close. Sorry. Yes?
Can you specify an incoming auditor and explain what revenue goes into this fund?
Oh, I'm so sorry. I did really confuse that, because I was thinking about the training fund. Sorry.
Everybody in the room might know about it.
Okay. If you determine that there is a property that is ineligible for the standard deduction, and it has been 6 months since they were ineligible and they did not notify you, you will go back and you will send them a notice that they are ineligible and a tax bill with a civil penalty included. The decision has been made by the DLGF that you are limited to going back 3 years, and you should be, when you assess the taxes that should have been paid if they did not get the standard deduction, along with the civil penalty, and you collect that money within 30 days, it comes to the auditor's office, and the taxes and 99% of the civil penalty get deposited into the auditor's ineligible deductions fund. The 1% of the civil penalty goes to the state to fund the DLGF's homestead database. And there is a state auditor remittance fund that you will use to hold those monies until you remit them to the state auditor's office. I am so sorry for the confusion. There is a past presentation on that's more geared towards how you do that billing, how you calculate the back taxes, how you do the notification to the property owner that is ineligible, and that presentation was given by Dan Baston, but it is still on our website from the 2011, I believe, County Auditors Conference, but I can't remember if it's spring or fall. But look for a presentation that's titled Baston and then Ineligible Deductions, and I think that presentation will help catch you up if you are new and you need some information. Yes. If she asked about what was the 30 days that I mentioned, the law allows you as auditors to collect the back taxes and civil penalty from the taxpayer for 30 days. After 30 days, it gets certified and put on the duplicate for collection, just like taxes. Still, the taxes and 99% of the civil penalty are going to come into this fund. Okay? It's just that you won't collect it. The treasurer will collect it as they do taxes, and it will go through the settlement process, but it will still end up in this fund. So potentially, if you find that a lot of mistakes have been made over the years and these deductions have not been cleaned up in your county, potentially you could have quite a bit of money, because it is the back taxes that goes into this fund. Okay. Since it's non-reverting, that money does not have to be spent. It doesn't go back to the general fund at any point. It will stay in this fund to be used for the auditor's office until it is spent. Okay. I did want to talk to you about supplemental annual financial report forms, and oh, I'm sorry, yes.
Is this process of identifying ineligible homesteads and assessing back taxes and penalty ongoing? Is this something we're going to be doing for several years, or is it
Her question is the process of identifying ineligible homestead properties an ongoing process or something just related to the pink form, like a one-time shot? And this will be ongoing because of the homestead database that's being created by all of you, giving input to the DLGF so that this information gets on there, and then you'll be able to check those as you get new homestead applications or standard deduction applications, and you'll be able to, go back as you feel necessary, but you will constantly have people transferring properties, and this will be kind of a constant way to try to clean up the tax rolls and these deductions. Supplemental annual report, annual financial report forms is something that Debbie and I really wanted to spend this year talking about with all of the affiliates, because you work with trying to get information from the other departments and offices in your county, and we really had intended to do some training on this because we had not been able to. We had not had the time the last couple of years to do so, not knowing what the Gateway annual report form was really going to look like for a while, and getting the information finally in December that we were still going to use the supplemental CAR forms. And so this year we wanted to make that concerted effort, and what we found out was at the beginning of the year that they might go away again. So Debbie and I did not do that training. I'm forewarning you that no one in your county knows anything more about the supplemental annual financial report forms than what they knew last year. And if that was nothing from last year, they still know nothing. And that is on us. But they did not completely go away. So we're going to talk about them with you so at least that you know what to expect, and maybe you can help us to do some education, and we will really do an outreach with our field examiners and with our efforts next year. But I know that's too late. But I'm going to start with the good news. And some of you may have heard this already, but there has not been a broadcast, and I'm glad John didn't steal my thunder. I get to tell you that the sheriff's pension trustee, the sheriff, and you will no longer worry about the sheriff's supplemental CAR. Yes, no more, no more. Now, you will not do a sheriff's pension trust supplemental annual financial report. You will not enter it into your Gateway annual financial report form. You will not have to try to get that to balance or any of that for the Gateway annual financial report. The information for the sheriff's pension trust will not be reported on the face of the financial statements if you are reporting on a regulatory basis. If you provide us gap statements that we audit for you, and that is what is put in your annual report, you will still have to find the information for the sheriff's pension trust because it is still a county fund, it is significant, and it is a trust. So you have a fiduciary responsibility to the beneficiaries of that trust. But you will not have to do it for the Gateway. The regulatory statements will include a note disclosure that there is a sheriff's pension trust in almost every county, that all counties that do have a sheriff's pension trust. And it will tell the readers of the financial statements where to obtain additional information, much like the Public Employees Retirement Fund note or the NPERS note does now. It just has, there is a fund, here's the name and address of where you can get a financial report for them. If you report on a gap basis, you have a CAFR, Your financial statements will still require this information, and your note disclosure will be much more detailed most likely, and so you will still have to find another way to get that information from the sheriff's pension trustee. But it's good news for the majority of our counties. I know that I contacted this week, right before I came to conference, McCready and Keene, and also Morgan Stanley, who's the trustee for most of these pension plans, or a good number of these pension plans, and they were both very excited to hear that they were not going to have to do this report. I think if you are reporting on a regulatory basis, which is the majority of the counties, you can let your sheriff's pension trustee, if it's your local bank, know that they will not have to do this for you for the 2012 year, and that will make them very happy. Now, we still do have supplemental annual financial report forms. The purpose of the form is to enable you to gather the financial information for the funds that are not on your funds ledger, but need to be included in the county's financial statements. In the past, this was taught to you very differently, so I want you to know this is a change. I think it is a helpful change. In order to determine which funds you need to collect information for that are not on your funds ledger, but need to be included in the county's financial statements, I would start with last year's audited financial statement that was done on the regulatory basis, and look at the funds you do not, circle on the funds on there that you do not have on your funds ledger. And when you see all those, this is a change, so that doesn't mean automatically each one of those is going to be added. Review each one of those circled funds that you do not have on your funds ledger, and you will add you will need a supplemental annual financial report form, or an AFR, for the treasurer's after settlement collections. Some of your reports may call that the treasurer's trust, but that is for the collections made after settlement that are on the treasurer's cash book but are not quitted into the funds ledger. Okay? And you will also need a supplemental AFR form for the funds that do not flow through the funds ledger at all. What you will find is that you'll have probably circled on your financial statements things like recorder's trust. Well, the recorder remits all of their funds to you eventually. There's a timing difference. And before, we tried to be precise and get that timing difference put into the annual financial report. It is immaterial, and we are not going to do that anymore. So you will not be dealing with things like recorder's trust, because that fund, eventually all those monies come right through your funds. We're only looking for those that never come to you, with the exception of the treasurer's after settlement collections and one other that's kind of a hybrid, which is the clerk's trust fund. Okay, so we're going to talk about that in a minute. I went through 5 county financial reports. I looked at large counties, small counties, rural counties, urban counties, and here's what I found that I think are the common funds you will still need a supplemental AFR for. Okay. The after settlement collections from the treasurer's office, and that's going to be different than any of the other AFRs, and we're going to go through how they are to be different here in a moment. The clerk's trust, including ISETs. Some of the clerk's money does come to you monthly. Court costs, infraction judgments, things you send to the Auditor of State's office, and things you put into county general and some of their other funds. But there is a whole bunch of clerk's money that's being held for plaintiffs and defendants in cases, child support, custodial parents, and for the waiting for the results, bonds that are not going to come into the county. They're going to go back to somebody who bailed a person out of jail. So all of those monies sit with the clerk. So rather than try to separate them, because the clerk does not keep separate records for what's going to come to you and what's going to go, what they retain and send out to other people, the clerk will report the entire trust fund balance. They may do so in two funds, Clerk's Trust and ISET's Trust, or they may do so in a single line. But they will report to you everything that's in their trust ledger. Beginning balance, receipts, disbursements, ending balance. And you will include that in the annual financial report. You also will probably have a jail commissary fund, a sheriff's inmate trust fund. You might have a county home, and if you do, their residence trust and commissary should be reported because that money never comes into you. I didn't find much else. I didn't find anything else in these 5 reports. So hopefully it limits all the things that we did get, like health departments and prosecutors' bad check programs and recorders' trust and all of those things that we were trying to get and we were duplicating. So we're going to stop duplicating. Anything that eventually flows through your records, we're not going to pick up. If you have questions as you start to go through, Debbie and I can help you this first time around, especially because if something was reported last year and you're not sure if it does flow through your records eventually, let us know. We'll try to help. The other departments and officers probably won't understand what you're asking, so call us, email us. We'll help you. We can pull up your last year's report and we can help you to try to figure out what it is and how we need to report it. But I think it's going to significantly limit what you have to do on your supplemental cars, and I think that that's a good thing. It's also going to improve the quality of the financial statement, other than the fact that we're not going to report that sheriff's pension trust that's big, okay? Here's the information that goes on to the supplemental AFR. The due date that we have put on that supplemental form is January 20th. If you want your information by a different date, cross it out and change it when you give it out to the departments and offices, okay? Otherwise, it's just minor wording changes on that form, and it's pretty much the same as last year. It's 4 o'clock. I do want to talk to you about this really quickly. The after settlement collections annual report, supplemental annual financial report, will look different than everyone else's. This is only accounting for timing differences. So when you ask the treasurer, and they were instructed on this is how to do their supplemental cars in the past, but it has been a couple of years, so if you have a newer treasurer, they won't know. But most of them do. And here's how they do it. They first start with what their after settlement collections were last year at the ending balance, which is your beginning balance, and that will automatically be the same number that they put into the disbursements column. They will then figure out how much collections they're holding right now that have not been quieted in. That's the ending balance, and it is the receipt number. It's an automatic thing because all we're doing is saying last year they had 8.5 million. That was what we started the year with. But that all flowed through and got quieted in and then distributed out. So it was dispersed. We don't want to double count everything else that came in during the time. All we want to do at that point is then say, and here's our new ending balance that hasn't come in yet. So that's the receipts, that's the ending balance. And that's all you'll do for your treasurer's cash book, and they should be able to assist you with that. The other supplemental annual financial reports are the same as what you have been doing. We're looking for instance, I gave you an example of the jail commissary and the inmate trust. What the sheriff would give you is a beginning balance. We want their receipts for the year, their disbursements for the year, and an ending balance. Easy breezy. You can get that added. You also have a couple of other slides on the chart of accounts updates. There were two. One of them was the changes in the titles to the 4D funds, just to make them consistent with what DCS had told you and what is on your remittance notices. And I emailed you that notification of those title changes only back in August 17th. And then I just recently emailed you on October 17th about adding the abandoned vehicle fund, which is number 1223. And so those are updated on our website. If you are still doing your implementation or need to take a look at those and get the most current, those are on our website and you can see them. Last thing, this is your warning. Debbie talked to you a couple of years ago about new legislation that requires you as a county official to report all errors, irregularities, variances, losses, shortages, or thefts of local government funds or property. They have to immediately be reported to the State Board of Accounts. I think it's something we haven't talked about in a while, and you forget about it. When it happens, you want to call the sheriff and say, get in here and investigate this. Don't forget to notify us. We've had two instances recently, one in Marion County, one in Johnson County. It was not auditors' offices, but one was the sheriff, one was the clerk, and the officials did the right things. They called in state police, they called in law enforcement, they got the prosecutor busy. One of them we didn't even find out until there was a prosecution in the case. But what happens is we have a very active media in Indianapolis, one that watches our office like a hawk, and they ask us, did they report that to you under that new law? And we had to say, no, we didn't get a report. We have to get that report because we have internal control work we now have to do with you as soon as this happens. So if it happens in your county, even if it's not your office, please remind the official to inform us. All they have to do is let us know. We will let law enforcement do their thing, but we just need to verify the amount for law enforcement, and we need to work on controls and make recommendations on those internal controls. So keep that in mind, okay? So I don't want anybody else to be embarrassed with Channel 6 calling them and saying, you didn't report this to the State Board of Accounts, when I know you're not trying to hide it because you went to law enforcement, okay?